been a banker for over 30 years now, and you've dealt with volatility. And many conversations that I've had over the past few weeks, people say that it's different this time around. You know, what do you believe is different? When you look at how volatile things are, and what's also been surprising is the remarkable resilience of the global stock markets. I mean, unfazed by geopolitical strife, unfazed by actual military conflict. So how do you explain the resilience of the markets as well?
Well, I think, first of all, that the resilience is partially explained by a much better preparation of the players in the market. Simply look at the financial institutions. If you think about how financial institutions, the robustness of financial institutions, be it in the US or in Europe, if you compare it between the last global financial crisis and now, it's night and day. To be honest, I think we are as robust and as rock solid as we have never been before. And that's not only for Deutsche Bank, that's also for other banks. And therefore, the market has a different level of trust that even if there is volatility, we can absorb it, be it from a liquidity point of view, be it from a capital point of view. The same, I can tell you from a lot of corporates. If I look at the equity ratio of German Mittelstand clients, it is nowadays higher than 15 years ago. Corporates actually improve their own balance sheet in terms of liquidity, in terms of capital ratio, in terms of corporates learned through the COVID crisis to work on their supply chains, to make sure that they are more diversified. And therefore, I do believe one needs to take that into account, that we simply have, in my view, more robust players in the market. Now, I think you are touching on a really important point, that I'm also amazed that the markets are so solid. We see some, volatility in the markets, but then you are at all-time highs back very, very, very soon. And look, with a 35-year background in banking and very long in credit risk, I hope that people are nevertheless always prepared that there could be the one or the other event which really brings the market more severely down. And therefore, for that, you need to be daily prepared. And that is, in my view, the task, obviously, of a management of a bank to do that for your own balance sheet. But more importantly, that we advise our clients on risk management. And in this regard, I can really see a renaissance in advisory. The level of discussions we have with our clients on risk management, on hedging their risks, is not comparable to the years before. And it's an opportunity for banks who have that know-how and who have an investment banking capability.
You know, it's a very important point that you made there about just healthy balance sheets, whether it's for banks or it's for companies. And we've seen that happen in India as well. The deleveraging has happened significantly after the GFC. But what does that mean in terms of the appetite for risks? Because the problem that we're faced with in India is that even though companies are sitting on strong balance sheets, private investment hasn't picked up. So when you look at European companies who are sitting on strong balance sheets, at this point in time, do they have the appetite to take big risks, whether it's M&A or it's expansion or it's looking at new markets?
I would say that over the last 3 or 4 months, that appetite reduced because if there is too much volatility in the market, and it's not only the so to say the market volatility, but if the trust in so to say the planability of issues is decreasing, then companies are stepping back. And we have said that also in our business and in the overall bank's investment banking business on the origination and advisory side. Fortunately, we haven't seen canceled deals, but we have seen delayed deals. So people are a little bit more nervous and cautious to do big investments. Nevertheless, they also see the opportunity, and they see actually the opportunity Europe has in these days. They see the opportunities in growth markets like India, in other Asian markets. We can see trade corridors between India and other Asian countries, the Middle East, which are really opening up. So people are looking into this. And I think that we may see for a couple of months, once this trade discussion is hopefully done and dusted and people have a better outlook view, I would say that then those investments are coming back. In general, from the balance sheets of the banks, but also the capability of the corporates, the risk appetite to invest long-term into growth is definitely there.
It's definitely there. So 2025, from an M&A point of view, from an IPO point of view, what are you foreseeing? I mean, India has had a great year the previous year and continues to see a lot of excitement in the IPO market, but the US was tepid. What do you see as the story for global IPOs as well as M&A for 2025?
I think it's a bit muted, to be honest, and that's what I also said at the last conference when I was talking about Deutsche Bank in this regard. Very happy about the overall development, but that particular business a bit more muted. But to be honest, as long as you know that it's only delayed deals, that people want to have clarification, for instance, on the trade discussion, that's not a big issue. We are planning this bank and also our corporate clients, they are planning for the long term. And whether it happens then in Q2 or Q3, at the end of the day, that doesn't matter. But clearly, I would say 2025, if I compare it now with that what we thought at the start of the year in the M&A and IPO market, more muted. But I wouldn't say that this means that the whole market falls away. It will come back then next year.
Oh, so let's talk about what's happening at Deutsche Bank specifically. You had a strong Q1 ahead of estimates. You're hoping to grow at between 5.5% to 6.5% annually over the next few years. What are you going to prioritize given the many opportunities that you see and the strong balance sheet that you sit on? And also in the context of the many tech changes that are happening, how do you reposition or rewire yourself at the bank?
That's a lot of questions, but you're right. I'm overall very happy with the development. It was a complex time 6 or 7 years ago, and now we are on a clear trajectory. And you know the opportunities which are presented for Europe, but also globally, because the answer of a lot of clients is that they would like to have at least one European alternative to the US banks. And as we are one of the last investment banks, corporate banks with such network, we are that opportunity is huge for us. So I'm generally very, very positive. Now, from the investments, it's focus, focus, focus. You can imagine that everybody in the bank wants to invest, and we need to take the decisions as where actually we do this. I do believe that one thing is clear, the global expansion of this bank, in particular in markets like Asia Pacific, is on top of the agenda. And we can see that also the brand name is really wanted here. That's one of the reasons why we invested so much in India. On the tech side, look, I think it is simply critical and fundamental and the precondition for being a successful bank for 3 reasons. Number one, you need to have tech for client experience. The client experience will be better with digitalization, AI, and technology. Number 2, cost efficiency. Number 3, very important for all of us and for us obviously too, is regulatory compliance. The more automated our processes are, the better it is. So technology is kind of, if we build the house of Deutsche Bank, technology is the platform.
You know, AI, and everybody's talking about the disruptive impact of AI across different sectors. From a bank's point of view, how much of AI are you already using? And what could a bank potentially look like 5 years down the line because of AI?
Well, first of all, the answer is that a bank remains a bank. I don't think that a bank will turn into just a technology company. People want to have our advice. The most important as a banker is that you have the trust of your clients.
But will bankers be replaced by AI agents?
Well, I would say that the coverage person and the people who are talking to our clients in the majority will remain human beings because that's what is wanted. But the way we get to decisions, the way we are handling the request, the way we are handling transactions, front to back processes will more and more automated, and AI can help a lot. Research, analysis can be done a lot with AI. Now, we need to have, obviously, for that, the most important is everybody's always talking about AI, and obviously, I love it. I saw, again, certain cases here and projects which are done in India for the world of Deutsche Bank. Super exciting. But the most important is that your data is clean and that you have good data. And therefore, I'm always saying, let's get everything right before we talk then about the luxury, and the luxury is then the application of AI. But to give you some examples, we are using AI in the retail banking when it comes to client servicing. We are using AI in the research area with great results. Completely different. I was just talking to our audit head. She's using AI in order to get to quicker and better audit reports. So it's across the bank. The most difficult task for us and the management board is to do the right prioritization.
So let me end then by asking you, since you will soon be leaving India, I'm going to ask you about the message that you leave your Indian team with. What's the target that you've set for Kaushik and team here in India, given the fact that you've made a pretty big investment bet on them?
Well, first of all, I said it yesterday when I left Mumbai, where obviously the majority of my time was, and a good part of our team is. I thank them because I think they've done fantastic work. I haven't been there for the last 2 years, which was a pity, and I will come back sooner. But they've done great work, and I'm really proud. Number two is that I think everybody should realize what opportunity we have, and we have our growth plans. But if I really go through my head again over the last 3 days, I think the team around Kaushik, they can even achieve higher results because the opportunity in this country is great. And it's nice to see that the brand name Deutsche Bank resonates so well. So actually, it is a success story which can even become a bigger success.
Well, we wish you the very best of luck with your plans for India, as well as the conversations that you're having with your clients. And of course, look forward to speaking with you as and when the India-EU FTA does finally get done. Christian, it's been an absolute pleasure. Appreciate your time here with us in the capital.
Thank you very much.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue from all of us here on the team. For now, goodbye. Many thanks for watching.